Imagine having a source of wealth you might not even be aware of right under your roof. That's right, we're talking about the potential financial resource you've been sitting on, quite literally, your home equity. Now you might be thinking, home equity? Isn't that just the difference between my home's market value and the outstanding balance of my mortgage? Well, you're spot on. But here's the kicker, this difference, this home equity, is not just a number on paper, it's a potential wealth source you can tap into. And one exciting way to do that is through something known as a home equity line of credit, or HELOC for short. Think of it as a credit card, but instead of being backed by your promise to pay, it's backed by your home's value. Intriguing, isn't it? Now you might wonder, what is a HELOC and how does it work? A home equity line of credit, or HELOC, can sound complicated, but it's really quite simple. Let's break it down, shall we? Picture your house as a piggy bank. Over time, you've been filling it up by making mortgage payments. This is called building equity. Now imagine you could tap into that piggy bank when you need cash. That's essentially what a home equity line of credit, or HELOC, allows you to do. A HELOC is a type of loan that allows you to borrow money against the value of your home, or more specifically, the equity you've built up in it. The more payments you've made on your mortgage, the more equity you have, and the more you can borrow from your HELOC. Now you might be thinking, isn't this just like a second mortgage? Not quite. While both are loans that use your home as collateral, a HELOC is more like a credit card. You're given a credit limit which is based on your home equity, and you can borrow as much or as little as you need up to that limit. You only pay interest on the amount you've borrowed, not the entire credit limit. Just like a credit card, a HELOC also has a draw period, usually around 5 to 10 years. This is the time when you can borrow money. After the draw period ends, the repayment period begins. This is when you start paying back what you borrowed, plus interest. One thing to remember is that since your home is used as collateral, if you can't make your payments, your lender could potentially take your home. So it's crucial to borrow responsibly. In a nutshell, a HELOC is a flexible way to access cash when you need it, based on the equity you've built up in your home. It's like having a credit card with your house as the credit limit, allowing you to tap into the wealth you've been building up over the years. So we understand what a HELOC is, but is it right for everyone? That's a question for the next scene. Stay tuned to learn more about the pros and cons of home equity lines of credit. Like any financial decision, a HELOC comes with its benefits and drawbacks. Let's start with the advantages. A home equity line of credit, or HELOC, offers flexibility. It's a revolving line of credit, meaning you can borrow and repay as needed within your draw period, which is typically 10 years. It's similar to a credit card, but with a much larger limit, since it's based on your home's equity. Additionally, the interest you pay on a HELOC can be tax deductible if the funds are used for home improvements. However, there are potential pitfalls to consider. HELOCs have variable interest rates, which can fluctuate over time, affecting your monthly payments. There's also a risk of overborrowing, leading to financial strain when repayment begins. Plus, if you fail to repay, you could potentially lose your home as it serves as collateral for the loan. Understanding these points gives you a clearer picture of whether a HELOC suits your needs. So, you're considering a HELOC. What's the process? To apply for a home equity line of credit, you'll need to ensure a few things: a good credit score, a stable income, and sufficient equity in your home. Lenders will assess these factors to determine your eligibility. They'll look at your credit history, verify your income, and evaluate your home's value against what you owe. While it may seem daunting, with the right information and preparation, applying for a HELOC can be a straightforward process. A HELOC can be a valuable tool for homeowners, but knowledge is power. We've covered the basics today: what a HELOC is, how it works, its benefits and drawbacks, and how to apply. But don't stop here. Dive deeper, do your own research, and consult with financial advisors. Each situation is unique and demands a personalized approach. Remember, your home could be a source of wealth you never knew you had. Use it wisely.